Now, the post-war credit crisis, we've seen an increase in remittance flows to Africa. What sort of figures are we talking about? I just referred to about 21 billion US dollars this year. What's driving the improvement?
Well, partly it's a recovery from the small dip that we saw last year when the global economic recession had impacts on the livelihoods of many people, many Africans in the diaspora who didn't get salary increases, who may have lost their jobs, and therefore were not able to send as much back to their home country in remittances as they had in previous years. But now, as we're emerging from the global economic crisis, people are feeling a bit more flush in their new homelands, and they're able to send a little more money back home to Africa.
Now, it's very difficult, we're told, to keep statistics on remittance flows, largely because many Africans actually use informal channels of getting the money to their families. So how can we really gauge the real size and the impact of remittances to Africa?
One of the things we clearly need to do is work closely with central banks to help them to monitor better the flows that are being captured through the formal banking system. We can also work with telephone companies such as Safaricom, which through its M-Pesa mobile money transfer network is now also facilitating fiscal transfers between receivers and senders of remittances across Africa. But you're absolutely right. Our data are still very, very poor. And the $21 billion that you referred to earlier as the total remittances sent this year is probably a fairly significant underestimate.
Now, there's the whole challenge as well of gauging what remittances are used for and whether they are channeled into productive elements of the economy. What would you say?
Well, there's no doubt that for many Africans, remittances serve as a safety net, and they are being spent to meet basic needs, to pay for health care, to pay school fees, to buy housing. But there's also some quantity of remittances, very hard to come up with an exact figure, that's being put into productive activities such as supporting small or medium-sized family-run businesses.
All right, let's continue on that tack, because we know that in Kenya, for instance, where you're stationed, remittances constitute a significant proportion of the country's foreign exchange earnings. In other countries, smaller countries like Lesotho, for instance, they account for 25% of GDP. So there are African economies that are heavily reliant and dependent on these remittances. There is a huge challenge right now of creating funds and creating private equity vehicles through which these remittances can be channeled into investments in the economy. How much of that kind of work is being done?
Well, we, together with a number of other organizations, are trying to come up with new financial instruments that will encourage people in the diaspora to contribute to the development of their home countries. And we're thinking of things such as remittance diaspora bonds. But it's very important to remember that remittances are essentially private transfers of money within families. And while they can be leveraged for development, they cannot be leveraged by the public sector or by aid agencies. These private monies are very carefully guarded by the people who are sending them back and forth, and they would be very concerned if there was heavy government intervention in the process. I think what governments can do to help is make it cheaper and easier for people in the diaspora to send remittances. In addition, governments need to start thinking about how to make the brain drain a brain gain in Africa. Remittances are essentially the monetized side of the brain drain, the 22 million Africans who are now living outside of their home countries. What governments need to do is help those people who are often very skilled and professional bring their knowledge and capacities back to Africa to help develop their home countries.
Just, elaborating on that a little bit further, trends show that Nigeria is the top recipient of remittances, across the African continent, followed then by the Sudan, Kenya, Senegal, South Africa and Ethiopia, and then I think a country like Togo as well comes in lastly. What does that tell us? Because we are told that, for instance, there are many skilled Nigerians working and living outside of Nigeria, and some would say this is a productive use of their talent if they're sending money back home.
I think there's definitely some truth to that. Clearly, the quantity of remittances that are coming back into specific African countries is partly a function of the size of those countries, but also other factors come into play, such as the size as a proportion of the total population of people in that country who are in the diaspora, what sorts of jobs they are occupying in the countries where they are, the wealth of the countries in which they are living and working, and then the needs of their families back home.
Is there a correlation, and I think you've answered part of that question, between the size of the economy and the flow of remittances? Basically, some of the more affluent African countries, the three leading regional economies, feature here quite prominently as the largest recipients of remittances.
There's definitely some correlation, but it's not the only factor that explains what's happening with remittances. To take an example that I know, because I'm also the country director of Somalia, in Somalia today, roughly $1 billion is coming into the country through remittances. That's almost equal to the size of our estimated GDP for the country of Somalia. The population of Somalia is quite small. It's around 8 million, but that's a very, very large percentage and a very large absolute quantity of remittances being sent to Somalia. That said, there are countries in Africa which are very heavily reliant on remittances, such as Lesotho, which you mentioned, has 25% of its GDP coming in the form of remittances. And that's partly, I think, a function of the fact that people in Lesotho are can relatively easily access jobs in neighboring countries, such as South Africa, which are better earning than the jobs they would get at home, and that makes those transactions much easier to do.
There's also a discrepancy, we're told, about remittances that come from outside of Africa and those that come from within Africa. We're in an era of slowed global recovery and growth, but we're also told that to a large extent, the figure of 21 billion explains the money that Africans are earning on the African continent and then sending back to their home country from within Africa, as opposed to members of the diaspora outside of Africa and Europe and America sending money back home. Is this the sort of trend and the shift, the paradigm shift we're likely to see going forward?
I think we will increasingly see remittances coming from one Africa country and being sent back into another. It's true that in the past, the pattern was what you described previously, namely people emigrating to countries, OECD countries, which are wealthier than African countries, and then sending their remittances back home. So there are still large African populations in the United States, Great Britain, and France, for example, that are sending significant remittances back to the continent. But we are now also seeing the emigration of labor from one African country into neighboring African countries. For example, we will see Kenyans or Tanzanians working in Rwanda, and vice versa. And those people too are sending remittances back to their families at home. I think part of the reason we're seeing this happening is because Africa is becoming a more attractive investment environment. As we've seen just in the last couple of years, Africa weathered the global economic crisis quite well. And people who once had to go out of the continent to find jobs are now able to find equally or even more attractive jobs within the continent.
Just in terms of immigration flows, what sort of trends are you seeing? Is there still a big wave of Africans leaving the continent to seek opportunities elsewhere? Or are these drives to return people back home, are those starting to take hold and have an impact?
I believe they are starting to take hold and have an impact. The big success in Africa of the last 8 to 10 years has been that governments have done a very good job at improving their macroeconomic management and creating stronger investment climates that are attracting investment not just from abroad but also from within. What we're seeing is higher levels of growth, more opportunity, firms that are expanding, jobs that are being created, and therefore far more employment happening within Africa.
Okay, and a final question to you. Globally, we're told that about $325 billion goes to developing economies through remittances. Africa only accounts for about $20 billion. So when we look at how Africa compares within the emerging market space, how other countries have seen phenomenal growth rates in Asia and in Latin America, could we attribute part of that success to remittance flows is it purely a function of policy and a changing global architecture? And how can Africans utilize these resources a little more productively in order to boost the competitiveness of Africa in this changing global environment?
I think one way to look at remittances is as another source of external financing coming into Africa. As you said at the beginning of this segment, we have roughly $21 billion coming into Africa this year through remittances, as much as $24 billion projected for next year. Those are very, very significant sums of money. In fact, that's larger than the combined value of foreign direct investment and overseas development assistance to Africa today. So this money is helping people within Africa to meet their development needs. We know that Africa is short on capital, that the investment needs are enormous. For example, the infrastructure deficit in Africa, according to World Bank estimates, can only be made up with a financing of approximately $90 billion a year moving forward. Domestically, we will be able to generate roughly $56 billion. The rest is going to have to come from Africa and from other sources. And the diaspora sending remittances back into Africa is part of the answer to filling that gap. What governments need to do now is make it cheaper and easier for Africans in the diaspora to send remittances back home. They need to make investment environments in their home countries attractive to the diaspora. The diaspora often knows how to conduct business back home much better than other people around the world. And they are interested in seeing the development of their country move forward. By creating the right investment environment, by encouraging Africans, skilled and professional Africans in the diaspora, to look for opportunities at home, governments can help people in the diaspora to contribute to the future development of their countries.